Hey everybody, Jonathan Broadbent here, your host of UnWoke.Academy. Today we're going to do a little behind the scenes glimpse into the financial PMA and what we've got going on over there. If you have not been following, go back and watch. There's a little bit of catching up to do, but this is important stuff. If you invest, if you have a 401k, IRA, or things like it, there's some information you need to know. In short, my position is that many of us are being led astray by woke Wall Street. I started to highlight it years ago, actually over a decade ago. I got called out. The Cliff's Notes version is I did a little write up in 2007, late 2007, on some behaviors that I saw from Wall Street and funneling money into one manager. And I thought it was inappropriate. And that sort of caused some things to blow up and put the writing on the wall. The days for me on Wall Street were numbered at that point, and I formed a company outside of Wall Street to oversee what they do. Eventually, I saw enough to form Unwoke Investing. I see a far left leaning within the world of finance that I think is inappropriate. And I've been making that argument for many, many years now. As an offshoot of that, I started something called Unwoke Investing to highlight what should be done in the world of finance and just to sort of paint a little clearer picture of what that looks like for me. I work in institutional finance. I have a background in financial due diligence, which means investment manager searches, finding the best managers and recommending those to individuals, endowments, foundations, trusts, 401k plans, you name it. We want to have a good process in place to find the right managers and then track them over time. If you bypass that and just simply say, for instance, that you've got a buddy who works in finance and manages a mutual fund, so therefore you're just going to funnel all the money into your buddy's mutual fund, that would be an example of a big no-no. You don't do that. And in my world, when we catch that, we call it out. It's those of us who care and actually implement due diligence, prudent standards. We call that out and try and get people to do the right thing. Well, that thing in 2007, when I wrote a letter admonishing the behaviors on Wall Street, led to some big trouble. And as I said, that kind of an offshoot of that was me forming a company that tracks and reports on these things. I'm not always well liked by the world of Wall Street, but there are lots of, um, I want to say, payroll companies, law firms, accounting firms, you name it, that work connected to that space that value the opinion that I have because I've removed myself and assert a tried and true methodology. So, as I've talked about a few times in a few of the last live streams that I've done, this is live, by the way. So if you are watching this from, where are we now? We're on Facebook, X, Rumble, and YouTube. If you're on one of those platforms watching this, two things. Feel free to ask questions, make comments. I will do my best to incorporate those and get answers to you, but also make sure to hit that like button, share it out to your network, and let's see if we can get some people into the conversation. So, one of the offshoots that formed once we formed Unwoke Investing, we launched, put out a whole bunch of exposés on companies like BlackRock and Vanguard and State Street and many others that you've probably heard of, and some you may not have heard of, some smaller ones that we did investment due diligence into, figuring out how woke they'd allowed themselves to get and whether or not they were allowing for traditional, true, tried and true metrics in their investment analysis. Unfortunately, I found that many had sort of jettisoned the true metrics of looking at the value of a company and replaced it with this sort of fake veneer of virtue signaling. I can't call it anything better than that because the virtue signaling like diversity, equity, and inclusion and corporate equity index, the CRT DEI, which is diversity, equity, and inclusion, that stuff has interfered with financial firms' true ability to look for good investments. Well, it's time to get back to basics. Let's get back to the fundamentals. I've been arguing that for a long time and pressuring those companies to get back to what they should be doing on behalf of their clients, your 401k, IRA, etc. It's met with a great deal of resistance. Lots of people in the world of finance for 4 plus 5, 6 or more years have felt that by doing the virtue signaling and slapping a label on it, that they are going to do good for the environment or social justice or whatever, they were able to collect a lot of money. Well, it was easy money for a long period of time, but now they've painted themselves into a corner. And that's what I want to highlight today. I touched on it yesterday when I did a live stream. I talked about some of the things that have come out of this. So, of course, originally, when we launched Unwoke Investing, which later became UnWoke.Academy, lots of people asked the question, okay, if I don't want to be in BlackRock or Vanguard because I don't agree with that, where should I be? And so we went out, we've scoured the earth for good managers, better managers, financial planners that didn't go woke. We found Matt and Drew and some others. Matt and Drew, by the way, have formed a strategic partnership. We've formed a strategic partnership with them. They are financial planners that don't believe in the woke stuff. They have kept their focus on doing what's right for the client, not the virtue signaling. So go back. If you're not familiar with Matt and Drew, we've done a couple of interviews with them. There are even a few commercials now that we've done supporting them and encouraging people to consider Matt and Drew or people like them who do a better job of not buying into the leftist narrative that everybody should be invested effectively in the same 30-ish companies. But also, as an offshoot of UnWoke.Academy, we formed what I still believe to be the world's first financial PMA. That stands for Private Membership Association. The website is actually financialpma.com. That's, well, let me be clear about what UnWoke.Academy is. If you have investment somewhere, if you work with a financial broker, planner, financial advisor, take this information to them. Ask them to implement the things that we're talking about here. And that means the whole gamut. We've covered a massive amount of information. Yes, there is a learning curve to it, but like other things in life, it's important. Take a little bit of time, even if you just do what I do with a lot of podcasts. Watch this. It will be recorded. It will be available on repeat. Put it at a higher speed, like 1.5 times, and just let it play in the background. Lots of these episodes, especially the ones where I've got guests and I interview people, can prove helpful to you. I certainly hope that they do. So, Unwoke.Academy is by its design and nature a go anywhere type of answer. You can deploy it, implement the strategies and suggestions we're making anywhere. Ultimately, as I keep pointing out, you are responsible for the results. But I do believe that when you strip out the management fees, you reduce or eliminate the advisor fees if you choose to do it on your own, you can do a lot more with a lot less. And at a basic fundamental level, you can feel proud about what you own and not have it be a mystery. Most mutual funds, and I include the access that I have in this analysis, as a person who owns a financial firm, it's difficult for me, even with pretty advanced tools and a great deal of access to managers, to figure out what they're truly invested in. I can often get, just like you, and in prior episodes, I've showed you how to do a little deep dive look into the mutual funds and what they're investing in. But often, or almost always, that's a rear view mirror. What you're doing is getting a glimpse into what it was invested in maybe 3, 4, 5 months ago, and you can see some of the investments, but not all of them. A better answer for those willing to do it and take the step is to build your own portfolio. And in prior episodes, I've showed you how to do that inside of a 401k plan. It is perfectly legitimate. You can go to your employer and ask for what's called self-directed brokerage account. And in that, you can deploy probably all of what we talk about at UnWoke.Academy rather than that pre-selected list of mutual funds that are orchestrated for you. You can go beyond that inside of a 401k plan. It may take a little tweaking and some adjustments to the way the plan is set up, but your human resources office should be able to do that. I've talked through that in some prior episodes. But another offshoot of the financial PMA is offering portfolio advice. We're getting to the point, and I want to be clear about exactly what this looks like and how this works. In my world, we don't typically talk about investment performance until there's at least a 3-year track record. That's pretty common practice. It's a little behind the curtains glimpse. If, for instance, I am asked to help with the management of an endowment or a 401k plan, I don't typically look at an investment like a mutual fund or exchange traded fund until they can show a 3-year timeline. How does it perform and hold up over 3 years? That said, we did actually get some clients into the financial PMA who wanted a set it and forget it. You help, you do the investment guidance and do the stock trades. Um, so just in case that's unclear, we have many people who take the investment due diligence we do, the research reports, and we can give some guidance and suggestions about how to build a good, proper portfolio with a good mix of different investments. And they might take that really anywhere, any stock trading account or discount brokerage online or their 401k plan or really anywhere, and utilize that as an alternative to defaulting into whatever sort of mutual fund that's probably woke and steering you into stuff that you may not like. You can build your own portfolio. Now imagine that. I think personally, and I've gotten this feedback from a lot of people who have gone into the financial PMA, going from getting that statement where you've got a list of those mutual funds and you're not really sure what it means, to seeing your actual investments. For a lot of people, that's kind of a cool transition, and they like that. Not for everybody, as I said, but for those who make that move, it can be beneficial and eye-opening. So, I'm looking at one in particular because, of course, I am keeping an eye on what's happening in those that I can see. So we have somebody that came into the financial PMA in late September, and we started implementing our strategy for them in October. And actually, on October 7th, 2024, a series of trades took place in this portfolio. And I have had a series of great conversations with the family who are now in the financial PMA. And one of the recent conversations was comparing what's happening in their portfolio to the S&P 500. Don't get me started on the manipulations and just how just mistreated many of the indexes are. But because S&P 500 is an index that a lot of people sort of can understand, at least at a basic level, I'm using the S&P 500 to compare against. And let's face it, a lot of people have gotten to the point where they've defaulted into these index funds or an ETF that tries to mirror the S&P 500. So for that reason, it's at least a conversational starting point to compare what's happening in this portfolio that started for this family on October 7th to what else might be available. Here's where we are. In looking at, I've got a couple of charts pulled up. I'm actually, as promised, I'm using publicly available resources so that you too can track this, double check the numbers, and let me know if you think I'm off on any part of this. But looking at Yahoo Finance, I've pulled up a chart for S&P 500 going back. I actually expanded it to 1 year. And then by hovering the mouse on the chart, I can see where the S&P 500 was on October 7th. On October 7th, I have to move my mouse back again. I was using it for something else. October 7th, 2024, it looks like we closed, the S&P 500 closed at 5,695.94. So just under 56.96 as a closing price. If you've done any stock trading or even just watched the S&P or listened to the news, you probably know what that means and the idea behind that stock market index. Well, what's happened since October 7th and now? Currently, I show today's market at 5876.14. I know that's a lot of numbers to throw at, but basically what it means is the market's pretty darn flat. Not a whole lot has happened. We've moved from 57.3 to 58.7, and in between, the market really dropped in a little bit earlier this year. So the S&P 500 has a couple of peaks and valleys, but overall is very flat. And in order to back that up, I actually opened up Grok, which is part of the platform X, formerly Twitter. And I asked Grok the question, that's AI, artificial intelligence, what has been the performance of S&P 500 between October 7th, 2024 and close of market yesterday? And of course, it goes into some calculations, gives some description. You should do that too. If you're on the social media platform or actually whichever AI you might choose to use, ask that same question. You're going to get a little bit of helpful insight into how the index is formed. And then basically what we have here is closing market on October 7th of, this is showing pretty much effectively the same thing. It's gone down and recovered to 5,803 by May 27th, which is close of market yesterday. So Grok backs that up. We have the same thing. We're showing a lot of up and down with mostly down, a little couple of peaks above where we are now. But overall, the S&P 500 is flat for those days. All right, good. So hopefully I've made the case that if somebody had chosen the date of October 7th, 2024, invested in the S&P 500 or something designed to replicate it, because of course you can't actually invest in an index. You can invest in things that are designed to mirror and mimic it, but the index itself is not an investment. I know that can seem weird, but that's how all indexes work. All they are is something to track a certain part of the market. Between those dates, you have almost no growth. So what's happened in the portfolio that we created? The portfolio we created, we screened for companies that we believe are positioned in a flourishing free market economy that are not woke companies, individual companies, not mutual funds. That's what we're suggesting. That's what we're encouraging for in the financial PMA. And most all of the conversation taking place in the financial PMA is designed to get people into building or managing or allowing somebody else to manage a stock portfolio, because that way you know what you own and you can strip out those management fees. But during that same period of time, October 7th through close of market, we have growth in this stock portfolio of an average 42.79%. I've pulled that directly from the account. I can see some have gone up significantly. A few have actually lost value, but on average for that PMA, and I want to pause to interject. Everyone's experience is going to be different. It depends on the composition, it depends on purchase date, and a number of other factors. So this isn't the sort of thing that has some sort of guarantee connected to it. It does not. What this is to me, and it's one of those things that I'm tracking pretty closely in those portfolios that are resulting from the financial PMA. I want to see how we're holding up on an average individual and overall for those people in the financial PMA. But what this tells me, what this tells me, pardon me, a little bit of a cough, is that we're on the right track. And I'm hopeful, and I do believe over a 3-year span, especially now that we have the America First policy statement, which was issued by Donald Trump on February 21st of 2025, instructing capital markets to focus not on the big mega cap globalist companies, the ones that have captured so much of today's capital markets, so much money, that I again argue, I will do this pretty much every live stream podcast that we do. We have a small number of companies that are, in my book, drastically overvalued. Instead of that, what Trump's America First policy statement instructs is, let's get back to basics. Let's get back to funding free enterprise, a lot of small business to mid-sized business, capital venture, to help companies free free up capital to be able to operate and compete in the marketplace. That ultimately, I know not everybody recognizes this, and I get into the conversation about what the stock market is, but and I think that's often lost in conversations. The stock market, yes, it is an opportunity for those of us who invest through things like IRA and 401k in great companies, hopefully do well and return on our investment. But on the other side of that, you have those companies that are hungry for that operating capital that helps them to grow and flourish as a company. So you effectively are lending to that company via the investment process. You're investing in that company hoping that it grows and does well and flourishes. The idea that we have experienced over the last 5-ish years of allowing those markets to get into the hands of a very small number of globalist companies and not funding new business venture, the things that could be the next big thing tomorrow, has been awful. I think what we're seeing here with this, again, this is not a weighted average, but an average growth in this portfolio of the stocks that we picked and bought on October 7th through close of market of almost 43% growth in less than a year is an indication to me, it's how I'm interpreting this, that we're on the right track, that we are buying the right types of companies, that we are reversing the trend. And I'll tell you, if we can get more people to listen to this message, more people to take money out of those 30-ish globalist companies that are drastically overfunded. Let me put that a different way. Not only do you not want to fund the woke, if you're listening to this show, I'm going to assume that you're not woke, um, but also I will make the argument that right now is exactly not the time that you would want to keep putting more money in IRA and 401k contributions into companies like Microsoft and Apple and Nvidia and Meta and Alphabet. Those companies are so, am again arguing that they are so overfunded that it's gotten preposterous. It's gotten ridiculous. That takes me back to the globalist bubble. I call it a bubble. If you're investing in those companies, you're putting more and more and more money into what I define as a bubble. Same thing holds for most of the big mega pharmaceutical companies. I am I would be I would not be doing my job if I were recommending heavy allocations into big pharma right now. If I see managers doing it, it's an alarm bell. And if I see managers doing it because they're saying things like, "Oh, this one has, they're going to solve the world's social justice problems, and they're going to cure the environmental crisis and all that stuff," that's a reason to fire them right away, because those are investment managers that are putting virtue signaling ahead of fundamentals. I won't allow that. That my job is to find out the companies and people, the investment managers, the portfolio managers, stockbrokers, financial advisors, whoever that's doing that, and call them out. And the reason for UnWoke.Academy is to arm you with the information to go to the people around you and ask the right questions. Ask them if they are doing that. Ask them what actually ultimately you're being invested in. Because if you're making those, I hope you are, and I hope you have a great 401k plan wherever you work. If you are making payroll contributions and every week, or whatever your payroll cycle is, every other week, you're putting more money into the exact same things virtually everybody else has been put into. And if I can continue to successfully make the argument that you're investing more and more and more money into a bubble, don't do it. Look for an alternative. The information that we put out at UnWoke.Academy is designed for you to take anywhere. If you want help, we'd be glad to have you at the Financial PMA. The way we've structured that is I made it intentionally so low, it's kind of a no-brainer to get involved in the Financial PMA. I'd love to have as many people as possible. It's a very different type of thing than your typical Wall Street. Um, I didn't set it up as a financial firm to try and gather your money and put it all at one fill in the blank financial firm. What we want to do is collaborate in the true nature of a private membership association, create as much privacy as we can in an environment that's rife with data mining and the desire to know everything about your financial life. We want to create as much privacy for you as possible, while also working in a collaborative environment to encourage you to do better for yourself, for your family, for your future, and know what you own. And so, to draw an analogy, private membership associations, if you're not familiar with it, I'd go back and do a little research. I have done a few podcasts on what they are, how they formed. I'll give you a few little waypoints. They have actually been challenged all the way up into the Supreme Court and have received favorable rulings all across the board, all the way up to the US Supreme Court. They've been around for a long time, and they're typically applied to health, wellness, agriculture, farming, those kinds of things where you get a lot of collaboration and people care enough that they want to find healthier, better alternatives for themselves. Well, all I did was take the concept of that and apply it to finance. It's the financialpma.com. If you don't have a good outlet to take this information and run with it elsewhere, consider joining the Financial PMA. As I've said, that's not a requirement, but if it is a good avenue for you, we can help and we'll provide some teamwork and collaboration to get you pointed in the right direction. That is, again, financialpma.com. And in the next episode, I'm going to talk about how we've shaped some of the answers for 401k plans or workplace retirement plans, things like them. It is actually a more complex environment than you might imagine. We do a lot on the administrative side, and I can give you some guidance and pointers to either implement if you happen to work in HR or as the CFO of a company, or if you don't, take the information and take it to them. I can coach you on how to get good information and questions to the leadership team at your company and ask them to make some changes to what's available inside your 401k plan. The ultimate goal is to defund the woke and get you in a better place relative to the fees that you pay and what you get in return for them. I'm Jonathan Broadbent. This has been another episode of UnWoke.Academy. Thanks for listening.